You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. And now, get ready to hit the option block.
All right, everybody, welcome back to the option block, everyone's favorite. I know it's my favorite. Hopefully it is your favorite as well. Bi-weekly source for all things options related. A little bit of options wit, some wisdom, some analysis, a whole bunch of unusual activity, a sprinkling, a smattering of your questions, mix it all together with some peering into the future, and you got the option block. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If you don't know where to find us, it's easy. TheOptionsInsider.com. That's the mothership from whence all of our goodness, all of our content flows. You can also find us, of course, all the usual places, iTunes and TuneIn and Stitcher. If you just want the radio, if you want the text, got to go to the old website. You can also follow us on the old social medias at Options on StockTwits and Twitter, and you get a lot of our content links out there as well. Options Insider on Facebook as well as on Mixlr, where we are streaming live right now every Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, for the old option block program. We think we worked out all of the stream issues. There were some issues I know you guys reported last week on Friday, and now it seems like we got it all sorted out. So you should be able to join us live as usual today here on the old option block. Speaking of as usual, I'm joined by the usual suspects. Let's start all the way back. By the way, if I sound a little bit different, I'm still in the old Southern studio, at least for another week down here. So bear with us, but we got the stream going. We got everything else going. It should be good. And all that noise means we must be joined by the Greasy Meatball himself, Mr. Mark Sebastian from OptionPit.com. Mr. Meatball, is that you, and are you there, sir?
It is indeed. Good to see everybody. Good to be here. Happy days. Sunday, Monday, happy days. Tuesday, Thursday, happy days.
There you go. And also
Wednesday, Friday, happy days.
Weekend what comes, the cycle hums, ready to race to you. Yes. I do know the song, sir. Well done. All right. That was a little before your time. That wasn't 80s, though, so that might have been a little bit that was
early. It ended in
the It did stay into the 80s.
I guess it made it to like 81 or something. So technically
there you go.
You may be correct.
Close.
You may be correct. And the other voice, listeners, is none other than Uncle Mike Tussaw from RCM Wealth Advisors. Don't call it RCM Alts, because they'll get mad at you. All right, Mr. RCM Wealth Advisors, how are things in your neck of the woods, sir?
Hey, I think I'm going to go jump the shark today on the water skis. That's what I'm thinking right now for some reason.
Don't mention jumping the shark on my show, sir. It's bad. It's bad luck. You can't do that. All right, we're just going to keep moving on. Pretend he never said that, and instead keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, welcome to the trading block. Like the name implies, this is the portion of the show where we tell you kind of what was catching our eye in today's whirlwind, just amazing sea of activity. I'm joking, of course. A bit of a quiet day on the old street. Most of the major indices closing unched or close to it, with exception once again of the old tech-heavy NASDAQ. Once again, selling off a bit. Selling off almost 0.5% today. Apple, after getting some love again, gave it some of that back closing off about a third of a handle. For a while there, it seemed like Apple was going to be charting a course for the rest of the market higher. Got as high as 148.28 today before closing right around 146, a good 2.25 handles lower. So all that love that was there early in the session for the NASDAQ and for Apple kind of withered and died by the end of the day. And the NASDAQ selling off on the end of the day. The S&P up slightly on the day, up fractionally on the day, and then Dow up fractionally as well. And all of that green on the screen means, of course, that a little bit of red on the screen for ye old VIX cash. Let's see how low we got. Actually got low down to 968 intraday, listeners. We'll have to wait till Friday to check in with Mr. Rose, Mr. Corner Office, to see exactly how that ranks on the historical spectrum, but an impressive level nonetheless, closing the day well shy of that mythical, magical 10-handle well into the single digits. So let's start there, Mr. Meatball. What caught your eye in today's activity? I'm assuming this continued, shall we say, erosion of VIX cash certainly was amongst them.
Yeah, it was a nice. The S&P kind of gave away at the end of the day, and but if you consider the fact that it's the weekend and it's a Monday, and you would expect kind of volatility to be a little bit up. The fact that VIX ended up below 10 after closing Friday above 10, I think it shows you how much they took volatility in today. They just destroyed it, and they're trying to get ahead of the weekend. We actually did not see the VIX close on the high of the day, and yet we saw the VIX futures maybe close a little closer to the high on the day, or to the lows on the day. So some rough pricing action for VIX and VIX futures, and things interesting day today.
An interesting day indeed, Mr. Uncle Mike. Same question for you, sir. Obviously, Apple starting to get a little active, and then giving up the ghost. We got a question actually about that a little bit later. I think we'll get to that in the mail block. But aside from that, what caught your eye in today's activity, sir?
Yeah, I saw that question. That'll be good. Overall, Apple is probably the only thing that had probably is the biggest thing that I saw today. I mean, we had a little bit of a down day in the commodity world. Energy, I believe oil was roughly flat not quite flat, but it's up slightly. XLE was down slightly. So from start to finish, from point to point, we didn't really have a ton of movement, but there were a lot of things going on throughout the day. What I would caution our listeners about a market like this is it's a lot like when you play a football team that runs the dive almost every play. They'll bore you to death with a dive, and then when you least expect it, they'll throw it deep. A lot of times when we have markets like this, and granted, we're right before the 4th of July. I shouldn't say right before. We're about a week and a half away from it. But whenever we're going into a holiday like this, or just whenever there's not a lot of reason for the market to move, and there really isn't right now, you have to be careful that just doesn't change, because it might last a long time, but volatility comes like a thief in the night, meaning that the market's going to have a big movement. Not very many people are going to expect it to the upside or to the downside. So with that being said, what I want to caution everyone, that's all of our listeners out there, if you're selling premium and you're gradually selling it closer and closer and closer to the money, and you're doing it because you need to get the premium check every month for whatever reason, be careful with that, because this isn't going to last forever. Markets do change at times. And so I guess just what I want to mention with this is that when things don't happen for a while, they don't just start to happen gradually. I really don't see the VIX going to 11, then 12, then 13. I would see something like, if the VIX is going to come back up, it's going to go from, say, 9.75 or whatever it closed at today to 14 one day. That would not surprise me at all, because when we have markets like this, a lot of times that happens. Now, is that going to happen today or a year from now? Well, that's the million-dollar question that you have to answer as a trader, but just be prepared, because it can happen.
Speaking of things happening, Uncle Mike, things have been happening. I know you like the commodities, your silver collar, not so much, but things have been moving, rocking and rolling out there in crude. This, shall we say, aggressive downturn over last week, then followed by a little bit of a reversal. It seemed like crude might have gotten some legs again today, but then it faded a little bit towards the end there. But still, interesting stuff there. Crude was hovering down around that low 40 level out there in WTI. I know you're not a big WTI fan as much as you prefer your XLE. I know you love blasting out those XLE 30 puts all day long. But that said, we haven't checked in with you and your commodity love in a while. How is all this movement out in crude and, of course, WTI and indeed XLE? How is all of that really impacting? Well, so there's been some vol out there again. We've been asking for a while, too. When's the vol going to come back in crude? We had a little bit of that last week into this week. Any of that changing your outlook out there? You firing away any trades out there? You're still kind of waiting and seeing?
If I could buy more XLE at this point, I would. I mean, I suppose you always can, but I don't want to get undiversified. But I really like it. I think this is just another chance to actually buy in for a longer-term trade. I really don't see crude oil staying in the low 40s forever. But I would caution at this point in time, we do have a lot of downward momentum. And although I don't have the statistics with me right now, I believe that there's a lot of high interest right now in short crude futures. I'd have to look. I can't, so don't quote me on that. But with that, the two things that are working against the oil bull right now would be, number one, the downward momentum with which we have had, for roughly a month now. And also the fact that we are in the summer doldrums type of thing. There's really not a lot of times to where we have a lot of reversals and things like this, but it could happen. Overall, I believe that this is a buying opportunity for the long term for oil stocks and any exposure with which you have to crude.
And I know, Mr. Meatball, you're not so much an XLE fan. You like it, but you're more of a USO guy. Has this price action over the past couple of weeks out there in WTI, and then, of course, the resulting related indices and products out there? We talked a little bit last week about some crazy USO puts. I know you like watching USO. Anything lighten up your tape out there? Maybe some of the vol action gets you intrigued about USO again?
I mean, vol is definitely a bid in this thing, and it's kind of interesting that USO is really starting to move around and WTI are starting to move around. What is kind of funny is that volatility is still not that high in this thing relative to some of the dives it's taken in the past. The last time the underlying kind of died like this, vol, OVX got into the 50s. Now it's barely in the 30s. So there is something to be said there that I think part of the thing is that WTI is now low enough that people aren't scared. And additionally, companies are making money here where they weren't even last year. I kind of had a question for Mike. I mean, what is the bull case for WTI? I mean, how does it get higher? This time, January, what is the scenario that WTI can get above $60 a barrel? And you see companies XLE like ExxonMobil back toward $90 an XLE, back to where it was, back to 70 or that case. What's the scenario where that happens?
Well, a couple things. First one, I think there's several could. Number one, more demand. Now, whether that's going to happen or not, that's a much longer discussion, but that is one scenario with which it could happen. Another one would be if they ever do get together in the Middle East. It seems like they continue to try to, but if they ever do get together in the Middle East and actually not halt production, but slow production, actually all agree to do it and actually go through with it, I believe that could cut supply, and we could also have another an increase in oil prices that way. Excuse me. And the other one, I don't know if it's necessarily so much for crude oil, but for XLE to come up, the other factor that a lot of people oftentimes overlook would be that of natural gas. So now this obviously has nothing to do with crude, but if natural gas at the lower levels with which it is right now, it is around the 3 level at this point in time. It was as low as $1.60 about a year and a half ago. But with that, if we do get a little bit of a demand for natural gas, that's also something that could push XLE higher. So in terms of are we going to have a raging demand for natural gas over the month, a July rush to get lots of natural gas? No, I don't really see that happening. I don't think anyone would. But if we do have a colder winter coming up, which who knows what that happens, that's another scenario with which it could happen, because you had mentioned by January that we could also get an increase in the XLEs and the energy companies. And then, of course, the old one that always could actually make something happen, geopolitical. We haven't had a good geopolitical craziness in commodities in a while. And right now it seems like we talked about this on the show, how there's some type of scandal coming out all the time, whether true or not, on President Trump. It seems to never move the market. At some point, we're going to have something happen to where it's going to be some type of geopolitical risk in some way, shape, or form, in my opinion anyway. And that's something that would also be part of the bull case for oil. And then the final thing is just it seems like everyone and their uncle hates oil right now. And oftentimes when that happens, the contrarian in me typically believes that it could go the other way. So those are all the things that I believe could be the bull case for oil over the course of the next 6 months.
I'm just putting it out.
So where, yeah.
Okay.
So I'm sorry.
No, good.
I was going to say, so where would you realistically think, looking at the scenario, and I'm just interested in, where do you think oil is going to be in September and then December? If you had to, I know you're not a trader and you're not a big oil analyst, but based on your position, where are you positioning yourself for oil to be over the next 6 months? That's kind of my question.
Okay, good question. Wherever it wants to be. That's because with that, over the next 6 months.
Thanks for nothing.
The way with which I'm trading this over the next 6 months, this is one of the ones to where, and I know I'm going to get, I know that you guys have made fun of me on this show many times. You guys have always been mean to me about certain things like this, but I'm doing an evil thing to this show. I'm actually being a buy and hold trader on XLE. But to answer your question, over the course of the next few months, what's concerning is the downward momentum in oil at this point. From a technical standpoint, there are a lot of support levels that it is at right now. So from a technical standpoint, if you go back to March of 2015, as well as January of 2015, as well as September of last year and November of this year, we're pretty close to some pretty key support levels. Oil did bounce at these levels. And with that, though, if we come down a little bit further, we don't have a lot more levels of support to go on that. So that's the concern of oil coming down. I think we're at a key point right now from a short-term standpoint as to where oil is going to go. If we break this level of support, if I'm a short-term trader, I'd be very cautious about getting into it. But I'm going to take the easy way out on this one and be a longer-term investor with XLE, as I have been for the last year, almost 2 years now. I would still view it as a buying opportunity because my time frame on this is 3 to 5 years. Okay,
that's pretty fascinating. I think that you look at the oil companies, the ones that are really heavily engaged in natural gas, I think are going to come out really well. One of the reasons I kind of like ExxonMobil. I have, in terms of crude, it's very difficult for me to, every time crude pops a little bit, just more and more and more U.S. shale goes online. Where does it stop? And if U.S. shale gets too cheap or oil gets too cheap, the big guys are going to step in and buy up all the assets and all that production will still be there, but it'll be even cheaper. I have trouble seeing oil. I think oil is probably a little oversold here, but I don't know if oil above 60 is something we see again in the next 5 years.
I don't know if I'm that long-term with you, but I'm kind of on the same train there, Mark. We talked about this a lot, obviously, on our TWIFO program this week in Futures Options, but you're right. There is, every time crude ticks higher, all this U.S. production just comes online, and particularly once if it starts getting in that range you just talked about, the 60 to 70 handle, that's when the shale really starts kicking in, and that's just a huge amount of supply. We've already got a supply glut. Now if you start kicking on these other sources, it is a challenge to see how we break those levels. That said, every week when we look farther out into places like WTI and others, there's always someone out there loading up on 100 calls in end of D's 2018 or something like that. So there still are the crude bulls out there, but yeah, lion's share of people seem to be echoing that sentiment. They are still lining up on the puts to the downside, and even when we were getting down in that 43 handle range or so, it was still put palooza out there. So interesting stuff. If you like that kind of stuff, again, check out our TWIFO. Meanwhile, we're going to keep on rolling right on into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, everybody, welcome to the Odd Block. If you notice, by the way, if it sounds a little different when you listen to it live, that's because it is. When we do it live here from the Southern Studios, you don't get all the bells and whistles, so no music, no transitions. If you want that cool stuff, make sure you check out the podcast. It'll be pretty. We'll make Mark sound good. It's a lot of work, but we get it done. And you too can enjoy that fun stuff. But when you listen to it live, especially from the Southern Studio, you get the raw version, and that's what we have going on right here. Nice raw odd block. Let's kick things off. All you guys always asking us, still to this day, what the heck's going on with these, call them what you will, catastrophe puts out in Tesla? Are they still active? Yes, they still are. Another almost 300 trading today. So if you're keeping tabs, as we are in our Tesla tracker, then these Jan 2019 50 puts up to nearly 28,000 contracts on that strike, 27,699, plus another almost 300 today. So if that's all opening, then it looks like it probably is, then we're going to be close to that 28,000 level for all of you playing along with the home game. Move your markers to 28,000. Meanwhile, let's get on rolling to the name that I know Mr. Meatball likes to watch. He likes to play. For some reason, he just loves these restaurant names. In particular, Darden Restaurants. They got earnings tomorrow before the open, and they were lighting it up today, up about 1.5%. One of the few real strong green names on the screen that actually maintained its momentum throughout the day. It didn't end up selling off at the end of the day like Apple and a few others. Closing today, $90.08, up about 1.5% on the day. This is a name that does about 1,600 contracts a day, so decent volume for an odd block name. Today, doing a whopping 36,000 contracts today, so all sorts of funky stuff. And what we saw actually amidst all that 36,000, amidst all that pre-earnings glut of paper, one big chunk did kind of leap off the screen at us. It was a block of 7,500 of the good old July 80 puts. Up there, 80 puts trading for a nice 80 cents. So double 80s going up there. Looks like paper gobbling those up to the tune, like I said, of 7,500. There's only a couple hundred contracts open on that strike, so it appears to be what it looks like on the surface. We didn't see a huge block of stock going up or anything like that, so it appears to be what it looks like, which is a little bit of pre-earnings action out here on that 80 strike. Maybe a nice long equity holder deciding 10 handles down is about as far as he wants to go in case a little bit concerned perhaps about earnings, or could be specking on it. Either way, he's drawn a nice protective line in the sand right at that 80 handle. And looking back at the year that's been out there, it's kind of hard to argue with him. This name has been as low as the low 60. I think it might have broken into the 50s. Yes, it did briefly back in July of last year. It broke into the 50 handle very briefly. Kind of languished around there for quite some time until about October, November of last year when it started kind of slowly rallying up to about where it is now. Got as high recently as about 93 and change, so it's a little bit off its highs, but still pushing well high, 50% roughly higher from where it was in that low 60 handle range about 6 or so months ago. So our friend here perhaps sitting on some nice gains and deciding he doesn't want to give all of it up. He'll give up $10, but that's about it. And perhaps maybe showing a little bit of concern going into this earnings. Mr. Meatball, let's start there. This sounds like the kind of trade you might be interested in. You know, size puts before earnings in Darden Restaurants. I know you're all sorts of bearish on these restaurant names these days, right?
Well, yeah, specifically Darden, as they may hold the single greatest insult to Italian cooking in history. These puts look pretty aggressive. They look opening. 9,500 of them traded on the day. They were still bid out at the end of the day. So somebody wanted these, and somebody's betting big on their earnings being as bad as Olive Garden's Italian food. This is this was a relatively aggressive purchase. And I'm kind of frankly, I'm surprised they didn't go for something a little closer. But that type of action generally points toward there could be some nastiness out of these earnings here tomorrow. So it could be that all those salad, maybe they're giving away too much unlimited salad and breadstick. Maybe people are realizing that Olive Garden isn't Italian food and it just tastes bad. Who knows? All I know is this customer does not think that thinks their earnings are going to be as bad as their red sauce.
I was just going to say, you took my line, sir. They're spending too much on unlimited salad and breadsticks, and now they're going to pay for it tomorrow, come earnings. But I think the only time in recent memory I've had Olive Garden, ironically, was in Salt Lake City. Which is not a place you go, but then you're looking for Italian cuisine, that's pretty much what passes for it. At least it was about a decade ago when I had it back in Salt Lake City. So probably the last time I ventured through those doors. But, you can't mock unlimited salad and breadsticks. But then our friend here clearly is concerned that perhaps the salad days, pun intended, are behind Darden and good old Olive Garden. There are other names in their basket, obviously, not just Olive Garden, but Olive Garden certainly the most fun to talk about here on the show. Let's move on to wouldn't be a show without some sort of MSCI product coming up on the odd block and occurring yet again today. This time we have the iShares MSCI Taiwan Index ETF, ticker symbol EWT. Closing today up about 2%, so not a bad day for this name. Closing today $36.31. This is the name that does about a little bit shy of 1,000 contracts a day. Today doing about 12,000 and change, about 15 to 1 puts over calls. So most of the action was in the puts. This was a bit of a funky one, listeners. We had to actually dig back a little bit to see what the heck was actually going on, because what we saw today's trade was looks like a size buying probably to close of the SEP 28 puts for a whopping 4 cents. And so when we see that, particularly when the open interest is pretty high, the open interest is about 22,000. Does seem like perhaps someone taking some money off the table. So we started digging and we looked around and noticed that actually this paper was opened back on the 15th and 16th of June, so just a few weeks ago, and it actually was part of a spread. So paper was coming in to buy the 32.28 put spread out there in September, doing it initially for 30 cents. Then they did it the first kind. How many did they do here? They did the first kind about 8,000 times, and they did it again the next day for about 27 cents or so, 28 cents, doing that about 10,000 times and change. Actually, a little more. They actually did 4,000 more at the end for a nice whopping 27 cents. They did them all over the place. They really love this put spread. And then today, they're not unwinding the 32 puts, no, but they are indeed unwinding the short leg, which is interesting, the 28 puts, which is the part of the spread that's actually worked out for them. So taking those off for 4 cents, looks like they're leaving the 32 puts on at least for now. When we get on out there to SEP, we see that there still is about 22,000 of those 32 puts open. Is also, if this OI is all of them, and it seems like it is, another about 10,000 or so of these SEP 28 puts. So what they've effectively done is given themselves a little bit of a long ratio put spread now out here in EWT, where they're long about 22,000 of these SEP 32 puts and short about 10,000 of the SEP 28 puts. That spread hasn't looked too great, as you might imagine. I mentioned the stock closing today, $36.31, up about 2%. This spread has eroded from about 30-odd cents where they were buying it, lost about half its value. It's around a dime to 15 cents right now, depending on how you price it up. So this one not looking too good. They decided to take one portion of one leg off, Mark, which seems odd, I think. Hey, but it is the odd block. And before we dive over to the meatball, let's look at what this thing has been up to over the past year. And this thing was flirting right about a year ago, flirting around the 26 handle. It's up about 10 handles since then, hitting the high right now, actually, for the year, about 36 and change out there. And clearly, the last few months of price action has not been favorable, and certainly not the last few weeks, not been favorable for a nice long put spread, Mr. Meatball. So what are your thoughts on the initial put spread first? And then I'm trying to think of a scenario, and maybe you could think of one where I had a long put spread like this. It wasn't working my way, and I come in and I close out half of the short put leg of the put spread. I'm trying to think of why I would do that. What are your thoughts on this one, Mr. Meatball? All kinds of funkiness here.
Yeah, well, one of the things that's interesting is that if he had taken off the whole thing, I get it. I've definitely seen scenarios where, and I actually like that approach. I put on a big put spread, and my cheapie and my short put that's out of the money is dirt cheap, and so I cover it. I mean, that makes total sense from a risk management and a position management standpoint. What makes a little less sense is only doing a portion of it. Maybe they couldn't get the other side. The broker said, well, if I can get the other side, I won't charge you commission. If you let me shop this. And the guy said, well, it's probably cheaper for me to do that than actually just go and put up the trade. So they do that. So I'm not 100% certain exactly what's going on, but that's kind of my understanding.
Yeah, I could see if you want to take it off, you take it off. And you want to take off one leg, maybe I can see that. We've seen some funkier things.
Yeah, I've seen that for sure.
Yeah, certainly. If you want to take off one leg, that's fine. The short leg's working for you. Maybe you get a little more aggressive. Don't buy back for 4 cents, but say la vie. Taking off half of one leg is just is odd. Hence the name, the odd block, which is all kinds of funky. Let us know what your thoughts are. Why would you take off half of one leg of your put spread and then leave the other half on and leg yourself into a nice funky ratio spread? It's interesting stuff. We like to hear your thoughts. Adjustments are always kind of subjective to begin with, so we like to hear your thoughts as we move on into our final name. This one we talked about before in the past. It's been a little while here on the old show. This is Iridium Communications, Inc., ticker symbol IRDM. Closing today, $11.30, up about half a buck or about 5% on the day. This is the name that does about 300 contracts a day, doing about 4,000 and change today. So pretty active day. About 30-1 puts over calls. Of all that, only 138 calls were lighting it up today. And of that 4,000 and change, 3,850 came in the October 10 puts. We saw paper lighten these bad boys up to the tune of about 50 cents in one block over there on the Amex. OI is close to that, but not quite enough, 3,201. So clearly this is an opening print, so it could be someone coming in and perhaps piling into an existing position saying, I'm a little bit concerned here with some downside. These are near out of the money puts. They're only a 10 handle, about a buck and change out of the money. So they're not too far out of there. Could be someone saying, I'm a little concerned here with these levels. We got a nice little run up again today. I'll take the opportunity to put on some additional puts for cheap. Or it could be someone, again, these went up exactly mid-market, so it could be someone piling in, again, perhaps looking to carve out a little yield here as well. Let's look at the year that's been out here in Iridium. One of the reasons why they've been on our radar a bit is they've kind of been vacillating around a little bit. They got down to about $7 and change back in September. Actually, they broke into the six range briefly back in September, got as high as about almost $12 not too long ago, and then flirted with it again very briefly back a couple weeks ago, actually. So this thing's kind of been vacillating around a nice 2.5 to 3 handle range over the better part of the last year, and perhaps someone out here deciding that they are concerned that that 10 handle could be revisited and willing to pay 50 cents to do it. Or Mr. Meatball, you on the other side of that, Mr. I'm thinking that perhaps this is someone looking to add in and draw a nice line in the sand there and say, I want to gobble myself up some of that at the $9.50 range. That sounds juicy. Which of those two sides would you rather be on?
I mean, it's not a bad. I mean, if you're looking for some yield, it's not a terrible trade. Might be partially, their open interest there is 3,200. So I don't know if that's opening or closing, but that far out, it kind of looks like a hedge. And if since it's likely opening, yeah, it's probably a hedge. And Iridium, that's kind of seem like, hey, if it breaks 10, it's really going to break it. Maybe that's why you would you would want to buy these. I don't know. This doesn't look like it trades very much. That seems to be October seems to be the month du jour, and so we could just that could be kind of where the timing is, and depending on when their next earnings report is, that could also be a big piece.
We got breaking news here from the Flowmaster in the chat room. He's always lurking. He says he thinks SpaceX just sent up a new satellite for Iridium this weekend. So there you go. Maybe someone deciding to blast away some premium. Maybe he can dig into his little magic system known as trade/option alert / what's trading and see if he has a thought onto whether these were paper sold, paper buying. Either way, we got to keep on rolling. It's the time of the show for you guys to take the reins. Also, maybe we'll chat a little bit about everyone's favorite controversial product, a.k.a. Bitcoin, because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is the portion of the show where you guys, the inmates, run the asylum. You dictate what the heck we talk about. Every once in a while, we like to turn the tables as well and ask you guys a question. Last week, we asked you guys, everyone and their mother, just asking us about Bitcoin left and right, how volatile it is. We talk about it a lot on Twifo. Seems to be bleeding into some of our other shows as well. So we asked you guys, about a week and a half ago was the end of that crazy sell-off we saw out there in Bitcoin. We saw a little bit more, I think, this recently, again, another 11% down day or something along those lines. So we said, hey, last week, everyone's talking about Bitcoin volatility. Where do you guys stand on good old Bitcoin after last week's aggressive downturn? And we gave you 4 choices. We said, hey, is Bitcoin too volatile? I'm out. Or did you say, hey, I'm still bullish, I'm still loving this thing? Or are you in the camp of I want Bitcoin options? Or are you in the I'm sick of Bitcoin realm? Mark, I know you don't read the notes, so what do you think won?
I've actually been looking at the notes here, so
cheater. All right, fine.
Believe it or not,
cheater. I thought I could rely on your laziness.
Although the answer did not show up because my system knocks out stuff. So I would say that it's too volatile. I'm out. That'd be my bet.
Uncle Mike, did you look at the notes?
I do.
Okay, well then I'll just keep going then. That's what you two get for being diligent. You ruined my fun. All right, fine. The winner was I want Bitcoin options. Not exactly a surprise from our audience. We do tend to speak to the options choir with about 41%. Someone's chopping something down there in the background, a tree or something over there. So whoever you guys are chopping over there, stop the chopping. Thank you. All right, there. That's better. With the number 2 is about I'm sick of Bitcoin, 31%. 41% I said for the I want Bitcoin options. 19% says too volatile, I'm out. And almost 10%, 9% of you saying, yeah, I'm still in. I still like this Bitcoin thing. So we'll see. This week I thought we'd take it back a bit. We'd go back to basics and we'd ask you guys, options, great way to get long, a.k.a. bullish, for those of you who don't get it, a.k.a. bullish exposure out there to stocks and to futures. What's your preferred methodology? What's your favorite way to get long get some long exposure, I should say, using the options? You like your old standby, the long call/call spread? You going to go a little bit dark side? You want short put/short put spread? Are you into the old stock/futures replacement strategy? Also a fun one. And last but not least, my old standby, the bullish risk reversal. So we gave you 4 ways to get some long deltas in your underlying of choice. And again, this has only been up for a few hours, but so far, early voting, easy for me to say. Early voting, nice and hot and heavy. Let's start with you. Let's go back around the horn the other way. Uncle Mike, what is your call, and what are you feeling in our poll? What do you think our audience is feeling?
I like 3 of the 4 of them. The only one that I don't like is the using a future, just because I'm of the school of thought that why use futures when you can use options? Nothing against futures. If you're a day trader, I think they're good. But going overnight, I'm just so much more of an option fan. That's just how God made me. So in terms of what I like, I can't make a decision because I like all 3 of the remaining ones. I probably use all of those pretty equally, just depending on what the market does. So I'm going to have to vote present on that one. In terms of what I think the audience picked, I'm going to say that we're all a bunch of degenerate premium sellers, and I'll go with short put spread.
I'm gonna put you down in the bullish risk reversal camp then, because you didn't vote, so I'm gonna make you vote with me. And I like a good bullish risk reversal every now and then. Mr.
There you go.
Mr. Meatball, what are you feeling, and what is our audience feeling, sir?
Audience is definitely feeling short put / short credit spread, and that's kind of my preference as well. Why bother with the call? Most of the time, just sell the put.
That's why you and Andrew get along so well. He's always like, I'll sell the put, and then maybe if things turn around, I'll think about buying that call. But I can see why you two gel on that level. I always talk to him about bullish risk reversals. He's like, I'll sell the put, and then maybe I'll think about the call.
I don't completely hate risk reversals. Usually when I do them, I'll do them on a ratio, so that I'll do 10 put spreads and buy 1 or 2 calls, just so I don't feel that bad about the upside. But I like having that nice credit in my pocket.
I don't know if I've ever met a bullish trade I didn't like.
That's true.
There you go. Uncle Mike breaking it down as our degenerate bull in the house. Actually, I was surprised by these results. I thought there'd be a lot more dark side in there as well. Our audience tends to lean that way. Only 23% saying short put / put spread. 50%, a whopping 50% saying the old standby long call / call spread is their method of choice. So there you go. That surprises the heck out of me. Again,
that surprises me.
We got a whole week left, so we'll see. That'll probably evolve, I'm willing to say. I think that will drop. Whether it gets below the winner, we shall see. Only 14% from my beloved bullish risk reversal. Only 13% for Mike's favorite, the stock / futures replacement strategy. I didn't have room to put it. We didn't have room to put in there really, with selling calls against it, all those other strategies we like to do to jazz up the stock replacement, kind of like I like to call it a synthetic covered call, even though that name doesn't really make any sense. I know our friends over there at Trade King / Ally like to call it the fig leaf. There was not enough room for that, so we just put stock future replacement. By the way, while you guys were debating XLE and WTI and USO, I asked our audience what they thought. What's their crude poison of choice? And so far, WTI winning 50%. XLE 40%, USO only 10%. So there you go. No love for your beloved USO, Mr. Meatball. You're on the other side. You're on the other side of our audience on everything today.
I don't love USO that much. I wish USO would reverse split 10 for 1 so I could actually trade it and had some premium. But USO's, I think, a great way to play bearish oil and a cruddy way to play bullish oil.
Predictably crappy, right?
Yes.
It is. But it's a great way to play if oil bearish. I would say that.
All right, we'll get into some of your legions of questions. Now, speaking of you talking reverse splits, Mr. Meatball, this is the good one for here. We could say this for vol views, but let's just bring it up now. This just came in from FContangotrader. He says, do you guys have an idea when VXX and UVXY will do their reverse split? Thanks. I'm asking for a friend of mine. So he's got a friend who's into vol, not so much him. He wants to know when that, we talk about it all the time on vol views, kind of keeps that product going. Do you know when the next reverse split is scheduled?
Well, if you look at UVXY settled $9. They don't usually announce it when UVXY is still 9, and VXX is still well above 10. So I think you've got to see UVXY get to the low 8s, maybe high 7s. Then you'll see something announced. I doubt they're going to call that today. VXX is nowhere in the near future, not until it gets back below, till it gets into the 10s.
There we go. Perfect timing. You're talking about reverse splits. That one just came in, so perfect timing on that one. Speaking of just coming in, Henry chiming in the chat saying he thinks Iridium's earnings are at the end of July, so this is someone that paper is buying those puts ahead of some earnings trade. So I could see that. Certainly makes some sense. Either way, I'm not mad at it. If someone's looking to get some premium there and draw a line in the sand, pick up the stock around 9.5, I can't really get too mad about that. And if someone's looking to hedge out to October, interesting choice. But interesting either way. Well, let us know what you guys would do with those puts. Speaking of what you guys would do, we got Mrs Wartsoff. People, I gotta mention this seems like every couple of months here, just because people always write into us. We're always talking about paper trading here on the show, and we're not paper trading, but what paper is doing. And we say, hey, paper did this. Paper bought these puts. I just talked about it. I'm sure I mentioned it a bunch of times in the old odd block just now. And Miss Wartsoff says paper trading doesn't count. A lot of people write to this all the time. They think we're somehow bragging about our own trades and that we're doing them in paper trading accounts. That is not what we are doing. Just to clarify for everyone out there, we are reporting to you what paper AKA the large institutional client or customer, is doing. When we say paper, that's what they used to walk into the trading pits with a paper trading card. The order was on a piece of paper. AKA the customer was known as, it could be a little retail guy too, but usually when we're talking 10,000 lots and stuff here on the iBlock, typically it's an institutional guy. So that's what we mean by paper. Just clarifying that again. That's our quarterly clarification for Mrs. Wartsoff and all the rest out there who think for some reason we're talking about our own trading in some sort of paper trading account. No, we are not doing that. We've got questions all over the place today. We got Kier Bimani. He says, hello. Well, hello. He says, what will be the Bank of America target for this week? I have no idea what you're talking about here, sir. You're right into the wrong show. Unless you talk about some earnings target, I don't know. Mark, Mr. Uncle Mike, you guys follow Bank of America? You got any earnings target information for our?
There's earnings in like a month on the 18th. I don't see any major. My Bank of America target. I don't know. It's gonna continue to be the third worst of the four big banks.
There you go.
How about that?
I don't know what you're talking about.
I'll go with you on that one, Mark. I'll agree with you on that.
There you go. That's what you get from us writing in for earnings targets, Mr. K. You're right into the wrong show. We don't talk about that kind of stuff. We love you. We love all your listeners, but
yes.
maybe the wrong show. Jelly writing in here says, hey, can I buy longer term options than leaps? So this person wants to go out a little bit. Leaps, of course, stand for long-term equity anticipation securities. So in that sense, they are the longer-term stuff. Usually they go out a year and a half, 2 years, somewhere in that time frame. You're looking at some of them. Some of the big indices, you can go out a little bit longer and things. But generally, you're looking at most equities and smaller names, going to be like a year and a half to 2 years, somewhere in that range. If you want to go beyond that, or you want to do anything that is not a standard listed contract on an exchange, you can do it, but you got to be a little bit sized, and you got to call up your broker and do effectively a flex or an OTC type trade where some house has to make a market in whatever the heck you want. In this case, let's say you want, I don't know, a 5-year or a 10-year option. There will be houses that will make markets in that for you. It'll be crazy expensive. You'll have to do some size, but you can do it if you're willing to do maybe a few thousand contracts. SIBO has taken some steps to make that a little bit easier with their flex and eFlex and making that size a little bit smaller, but you still got to be pretty sizable. I don't know, Mark, you probably used some flex in the past. What's the smallest size you can get up on like the eFlex these days?
You've got to run through a broker. If you run through a broker, you can get as much as you want. It'll do you can get whatever you need.
Still kind of hard to get a 10 lot though.
Yeah, you can't get a 10 lot, but you can get a 10,000 lot done. With eFlex, it's easier to get 10,000 done than a 10 lot.
Yeah, I definitely knew that. I know they've tried to open that window a little bit more to some guys, trying to get a little more, but that's not really the retail playground.
Don't bother.
That said, Mr. and Mrs. Jelly, maybe you want to do 10,000. I don't know. So the answer is yes, if you're willing to pay up for it and do a little bit of size. Uncle Mike, when you do your 10,000 lots, how do you usually do them?
Typically a 10,000 lot. If I'm trading on SPY, it's typically not a problem. So that's kind of how I do it with that. So no, I've done some 4-figure trades before, but I've never done a 5-figure trade from a contract standpoint. So I do not have any experience on the flex side of it.
Since we're talking to Uncle Mike and he has been invoked, here's a question that's pretty much for him. It comes from Andrew Freeman. It says, I know Mike is out of Apple, but if he had to make an options trade out there now, what would it be? There's no bid on I think he's referring to, I always joke about you here, Mike. There's no bid on the 70 puts. I always say you're blasting on the 70 puts. And they only list December puts down to 80, where they're bid for 9 cents. So I guess he's trying to follow my joking advice of you selling all those 70 puts and finding there's no bid for those. Surprise, surprise, when the stock's pretty much double away from that now. That said, Uncle Mike, if you had to go play in Apple land, what would you be up to right now?
Well, let me tell you what we actually do play in Apple land right now. We have a portfolio at RCM that we refer to as the triple income, and that's where we try to, step one, sell a put on a stock. It's a dividend-paying stock. Step two, hopefully get it put to us. And so that's the second spot of the income where we would get the dividend on it. And then step three, sell covered calls on it or call spreads depending on the stock itself. One of those stocks with which we're using it is Apple right now. And so we're just doing monthly covered calls on at this point. And so We are actually long the stock, and we're short the 152 halves for July for the covered calls on it. So that is what we actually technically are playing in Apple right now. But to kind of expand on it, if Apple were to start to produce the next great thing, the next iPad, the next iPhone, or whatever it is that they come up with. Once again, we've talked about on the show before, the standard's too high. They're such a huge company that if they don't change the world, I'm not interested in them, quite frankly. That's how good they are. But with that, in terms of where a lot of the option plays are at this point in time, there is a little bit of premium to be had in there, not a ton. So like, for example, at the money, Apple's trading at 145.82 right now. If you want to go out maybe 3.5 weeks, you could sell the July 145 puts for $2.25. By doing that, there's a little bit more than 1%, and you're getting the put premium, and you're able to own a really good stock at 145. So that's probably one way with which to go. In terms of whether or not it's the time to be collaring it, to be taking a larger than life position, as I was at one stage of my career, and collaring it, I don't think the stock itself is good enough to justify doing that at this point in time. But if you want as one position in your portfolio, I think it's a great stock to have as one position. And what we're doing with it at this point is we're just selling a little bit of out of the money premium on it, just trying to have exposure to Apple and get a little bit extra premium here and there. So that's what we are doing on it right now. I don't know if, let's say that you do believe Apple's going to continue to be a world changer, as I did several years ago, that we talked about on the show all the time. I don't know if all the collars and that type of thing would still work like they once did, as I don't follow all the ins and outs of every little option and the volatility in Apple as I once did. But for right now, I think it's just a good stock to have in your portfolio. Sell some calls against it.
Mark, what are all your, I know your crazes in the pitch chat used to be super hot Apple. They had the time, I think, going into earnings this last quarter where the vol was kind of cheap, so it looked kind of attractive again. Are you guys looking at anything else out there? Or are you kind of in the Uncle Mike wait and see mode right now?
I think the interesting thing is that if you look at the NASDAQ and the way the NASDAQ has performed, the reason why the NASDAQ hasn't caught up to where it was a couple of weeks ago before the sell-off happened is entirely Apple. Amazon's basically caught up. Google has. Apple's still off, 8% from its highs? So it appears to be in kind of a holding pattern. I do like it as a potential put sale or a put spread sale. As you know, it's got so much cash. I don't see it taking another big dive from here, but it may not do anything exciting here until the next earnings. At that point, I'm going to be looking to make sure that the premiums aren't oversold, and I'll probably be stepping in to try and buy calls if that's the case.
And I'm looking here at the puts while you guys were talking, and our friend here is right. I forgot their name, Andrew Freeman. They're right. You have to go out to Dees to get a bid in those puts, and 70 strike isn't even available. You got to go to 80 puts, and then they're only 9-cent bids. I don't know if that's rich enough for your blood there, Uncle Mike. But
no,
it will behoove you to know if you go out to Jan 1 month beyond it, you can trade a 2.5 put in January. They go all the way down to 2.5, and in fact, someone traded 8 of the January 47.5 puts today. So there you go.
Well, and kudos to Andrew for writing this question, because of the fact that I remember you guys had really pressed me on the show. I think it was like maybe 2 years ago. At what point would you get into Apple? And you guys put me on the hot seat, and I had to say something, so I said 70. And so apparently Andrew's a longtime listener. Thanks for your loyalty, Andrew.
He's a good man. We like him. Send in your name. We'll send you a nice T-shirt or something with a nice picture. Uncle Mike got it. Meanwhile, we got to keep rolling into our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, and welcome to Around the Block. Like the name says, this is the portion of the show where we peer around the block into the future, let you know what we're looking at. Mr. Meatball, we'll start with you. A lot of things cooking. Fed governors mouthing off. Bitcoin getting crushed. Oil kind of vacillating. VIX still in single digits. What is on your radar for the rest of the week, sir?
VIX Mo, the old VIX, settled below 10 for the first time since about 10 years ago. So short vol is even, it got if you look at it at really another measure of it is now the VIX is lower than it's been in 10 years, and yet another measure. That's interesting. And yeah, I'm going to be watching for a slow week. I think we have a serious chance for a bull rally into the 4th of July, the Patriot rally. And I think we could potentially see highs of the year on, this week potentially.
I know you got to hang out in the small town that reportedly changed America. So before you go, what's cooking in the land of the pit and indeed Carmen Line?
No, I'm actually in Chicago. Land of the Pit, we just had a great mastering VIX class, not a master class, but a mastering VIX class. It was really good. You can shoot me an email if you want to watch the recordings in retro, and things are really good. I've got my professional trader summit this week, so I'm going to have all of my top students in town for hanging out and drinking and learning and podcasting and eating.
I'm sorry to be missing it. I will still be in the Southern studio for the next week. One of the tastiest things of all time is a steak on Mark Sebastian. That's just a very delicious meal indeed. But unfortunately, I will miss it. So do me a favor, Mark, and just get me a nice steak to go. And I'll come get it. I'll come get it in about a week or so. Well, enjoy yourself. We'll figure out what we're doing on Thursday here for the show. Maybe we'll figure out some way that we can beam into you guys and enjoy the festivities remotely. Meanwhile, Uncle Mike, same question for you, sir. What is cooking in the land of? Well, first off, what are you watching for the rest of the week? And then we'll get to what's cooking in a little bit.
Well, I think that with what I'm watching, I'm still watching for the crazy thing to happen in the market that hasn't happened yet. Meaning, at some point, one of these accusations on Trump or some type of crazy geopolitical news, something's going to move the market. So I'm watching for that to happen. Whether it happens this week or not, likely not, but you never know. The other thing I'm still kind of monitoring pretty closely at this point is silver. It's been coming down a little bit, so I'll be keeping an eye on that one for sure. And then in terms of what we have going on at RCM, if you are looking to ditch the ticket charge, feel free to contact me. We have relationships with several brokers, and we are running a little bit of a special right now. If you open up an account with RCM, and we'll start it early. We're going to do it for the month of July, but we'll start it early. If you open up an account through RCM, with a new account, and you qualify for it, and it just makes sense. For everybody, we will actually give you a $100 gift card for the option pit. If anyone is interested in that, feel free to contact me. I am at 312-212-3531, or shoot me an email at mtosaw@rcmfs.com. And that can be an advisory account or an account with which you're looking to trade on your own and just want some occasional advice.
There you go. Hit the man up. He loves to talk to you guys, and he loves to talk Apple even if you want to talk about selling those 70 puts. He will walk you through how to find a bid. Or maybe those 2.5 puts are attractive to you, Uncle Mike. You never know. You never know what your strike du jour is going to be. Speaking of never knowing, before we go, people are updating our little flash poll here on crude with their crude weapon of choice. 42%, it's a tie. 42%, Uncle Mike, between WTI and XLE, both coming in at 42%. Only 8% for USO and 8% for other. So I'm guessing they like Brent or maybe some of the crude stocks or things like that. But no, interesting how that breaks down. Speaking of breakdown, we got to get out of here. So on behalf of Uncle Mike and the Meatball and indeed myself, I want to thank all of you out there in the listening audience for downloading, streaming, and subscribing. And of course, for joining us in the live stream. Glad we can get that up and rocking again. We missed it on Friday. There were some issues getting the handshake going here in the Southern studio, but all seems to be behind us now. So look forward to more live streaming this week, and we'll see you next time for more of the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.